Good morning and welcome to this week's edition of Winston's Weekly, covering all things property. I'm Manny Anton, your host for today's property chat. Winston, welcome back.
Thank you.
All right, let's start with what's happening in US markets, and we've had an interesting week.
Yes.
We've had what we've seen is what looks very much like the start of a rotation out of big tech and the heavy the heavy tech names into those interest rate sensitive sectors and the cyclicals, so property, industrials, financials, and in fact small companies as well have got a little bit of a move along. So the Russell 2000 index is up almost 10% for the week, which is fantastic to see those guys moving. So basically, as we said, all interest rate sensitive sectors. Traders are now saying in the US they're factoring in 100% probability of a rate cut in September.
Yep.
It's all going gangbusters. What are your thoughts on that news?
Well, the rotation basically is as a result of expectations now that there will be a rate cut in the US in September. And of course, what they're doing is they're moving out of those tech stocks, AI related stocks that have been driving the market over the last year or so, into the interest rate sensitive stocks. So there is some rotation going on, and that's probably going to continue through because as you quite rightly pointed out, the market is sort of 100% convinced that there will be a rate cut in September.
I think that's right, barring any shocking numbers that come out between now and then, but it's looking very much that way, and hopefully it continues. How far behind the curve do you think we are, though? Because the Americans are, they're locking in interest rate cuts now and 100%. We're still not quite there.
We're not quite there because we're under a different scenario. The US seems to have tamed inflation, whereas we haven't. The CPI still looks under some pressure going forward. And there are still some expectations that the RBA may well raise rates at its next meeting rather than cut them. So I think expectations here are that there won't be a rate cut in the short to medium term. The best they can hope for is no movement at all, and waiting for more numbers down the track that will support a consideration of a rate cut towards the end of the year.
Yeah, let's hope so.
Yeah.
The Europeans have started cutting rates already.
Yeah.
The Americans look like they're pretty close now, and we're slightly behind the curve, but we'll get there, hopefully.
But the thing to keep an eye on in terms of the Australian market is likewise, rotation may well be a feature going forward at some stage when it does kick in that rates will be lower. So there'll be some rotation, and of course those stocks that will benefit, those sectors that will benefit will be the interest rate sensitive sectors, small companies and the REITs.
Yep, and it makes sense. Yep. Okay, well let's turn our attention a little bit more to domestic markets. A couple of little bits of news out. Maybe we should start with lifestyle communities because they've had a fairly horrific week in terms of price performance. What's happened there? They've taken a beating.
They have had a horrific week. Last week on Monday, there was an article that came out and the ABC questioned a few issues relating to LIC about their deferred management agreements with owners at one village, Wollert. A group of them got together and they're sort of challenging the legality of deferred management agreements and the right for LIC to take a percentage of the profit that's made when they go to resell a property. So that was the start, and then we saw the stock fall by a couple of dollars. And then this morning, actually, they've come out with Lifestyle have come out with an announcement that they're sort of cancelling any of their forward projections on the guidance on the basis that given the uncertainties in the market that they're not quite sure at this stage what impact that'll do, and the stock's down about another $1.70 or so.
Well, investors don't like uncertainty.
No, they don't like uncertainty.
And that sounds like uncertainty to me. Okay. Let's talk about Dexus. Dexus have announced as well this week they're going to be building 2 new premium office buildings, correct?
Yes,
What's that all about?
Well, these new buildings that are slated for development are going to be the tallest buildings in Sydney when they are developed. And the expectations, the reasons why they're sort of angling on that basis is that they're trying to entice a lot of the global companies and so on to move to Sydney and to have offices here. I think in the current environment it's still questionable about how positive this is going to be, but I suspect that until such time as they get enough people interested in taking space in those buildings, they probably won't develop anything until they've got pre-commitments.
Yeah, what are the addresses on those buildings? Where are they going up?
I haven't got the full details, but I'll let you know.
Oh, obviously CBD centric
CBD,
somewhere.
Central CBD.
Yeah. Okay. Wow. Something to look forward to. New buildings. All right. Moving on. Our second time with our new segment, which is the a stock of the week. And what's your stock of the week this week?
The stock of the week this week is the Qualitas Real Estate Income Fund. It's quote is QRI. It listed about 5 years ago on the ASX, and it's primarily a lender to property assets, developers. It has 40 loans. Its market cap's about just under 700 million, and it pays a regular monthly distribution. Right. And it's yielding at current levels. The stock's trading around 162.63. The NTA is $1.60, so it is a slight premium to NTA. It does publish its NTA monthly and its income distributions monthly as well. It's yielding about 8.8, 8.9% at current levels, which is quite attractive in this environment.
Good. Yeah.
And it's reasonably secure. It's got no arrears, either in interest payments or any issues with any of the loans that it has, of the 40 loans that it has. And I think it's a reasonable exposure to the sector that provides a regular income stream.
Okay, great, thank you. And just before we move on from that segment, just remember these aren't recommendations when Winston covers a stock on his stocks of the week, purely for information purposes only. Okay, well, let's move on. And what can we look forward to next week? Is there anything on the property horizon we should be aware of, or any material news expected?
There's nothing specific. As I say, we're getting closer now to the results coming out early in August, and so stocks are in blackout, generally speaking, and we just have to wait and see what happens with markets everywhere in terms of where interest rates are going and what's happening with the rotational issues. The US market was down last night, and it's reflected in our market's performance today, which is down about 1%. Okay.
Winston, as always, thank you very much for your insights today, and we will be back with another edition of Winston's Weekly next Friday. Until then, have a great day, a great weekend, and we'll see you next week.